with Let's take a look at a chart example here and try and understand what the chart is telling us. We use the price and then we'll use the RSI. Let's begin with price. Obviously here there was a breakout attempt just under $80 that has failed. So anybody who was playing the breakout, of course, can see that this is a failed breakout and could be the reason why the stock is down about 7% so far after failing to break out last week. So obviously price is telegraphing that the stock is struggling and that it should struggle until such a time as when it moves back above the recent weekly closing high, again just under $80. So the price is telegraphing a little bit of a problem spot here until we can see a breakout. Now if we switch and go to the RSI on the weekly, one can see a better picture in my opinion, because if you take a look at the top side resistance on the weekly RSI, you'll see that in the past 2-3 weeks we've come back to test that line and we've stalled. So the RSI was already giving us a reason to expect a pullback after that resistance. On this 2-year weekly chart, there's also another line. This line goes back to the most recent break. Now of course this break brought the stock off the highs of 2015 and we've been lower since. So that's a meaningful break. So we draw a line from here and you can see clearly we've hit that same line twice, and each time the market has coiled back down. The RSI rejection for the highs there and a shallow pullback, and again we are doing the same thing here. So that looks like a double top over the last couple of months, suggesting that we can still expect lower prices. Keep in mind we are coming close to RSI 50. As we move below RSI 50, expect an expansion to the downside on a week-to-week basis. For example, the last time we moved below 50 was during this period for this big drop on a week-to-week basis. So the risk is, as the RSI moves below 50, one can expect lower prices. Now this is a 2-year weekly chart. If we extend this and take a look at a 6-year weekly chart, then you can see there is also another line. So the previous 2 lines are still in play. In fact, the lines are confirmed because take a look at this 6-year weekly chart. Take the highs on the RSI. The highs go back to 2013 here. And again, we've hit that twice. Take a look at this RSI trend line that we drew previously. And again, we can see that hit the same level twice. And there's another line. So I believe the RSI is a better tell of what to expect, because take a look at this line going back to the lows in 2011 and just extend that line this way. You can see again we make contact with the same 2 points acting as backtest failure. Now let me clear all those lines and draw that again because it gets a little confusing. Take this line here. Like that. You can see ever since we broke through here for the highs there, we've gone above that line and below it with uniform action for the highs there. And over the last 2-3 months, we've hit that line once and a second time. So that's the third line I'm talking about. You can see that if you dig into the RSI, it tends to give you a better picture for what to expect. So given this resistance for now, we can assume that until the stock can move above this long-term previous support line, now acting as support, until we move above this line, the stock should be pretty much pressed lower, suggesting to expect for now either sideways action or for the most part a pullback and a continued pullback in the stock. And the pullback has already begun with this 7% drop this week. We shall see. Eric Mwatha with Mwatha.com. As always, good luck, peace and blessings. RSI sentiment measure is king, in my opinion. I am out. Mwah.